Amid worsening decline in Nigeria's revenue generation, the federal government has announced plans to raise 720 billion naira from the bond market in the third quarter of this year, a move that is expected to increase the country's debt profile. According to the Debt Management Office, the federal government will raise between 630 billion and 720 billion naira from bonds in 9 different offerings between July 18 to September 19, with the bonds tenure ranging from 10 years and 20 years. The development has been attributed to raise the country's debt to over 42.3 trillion naira, and even more when other debts incurred by the government are added. It will interest you to know that Nigeria's total debt stock, according to the DMO, is pegged at 41.6 trillion naira, but is set to raise due to the bond issuance, which will take place over the next 3 months. Well, let's talk about this very important development. I'm being joined live from our Abuja studios. He is a professor of finance and capital market, as well as the president of the Association of Capital Market Academics of Nigeria. No other person is Professor Uche Uwaleke. Prof, good afternoon and thank you for your time.
Good afternoon, Tolu. Thank you very much for inviting me.
Prof, let's start with this report I read preceding this interview. The federal government is targeting 720 billion naira from bonds in Q3 of this year, spread along 10 to 20 years tenure and all of this. First is, I guess we have no choice. We must just keep borrowing. What do you think?
Well, Tolu, that's I think it's part of the government's borrowing plan for 2022. You recall that the 2022 budget of 17.13 trillion has a deficit of about 6.9 trillion or 6.39 trillion. Now, out of that deficit, the funding or the financing is largely going to come from borrowing. The federal government in that budget plans to borrow 2.57 trillion from external sources, another 2.57 trillion from domestic sources, 1.16 trillion by way of a drawdown from multilateral and bilateral sources, and just about 91 billion from privatization proceeds. So I think this borrowing for Q3 of 2022 is a part of the 2.57 trillion the government intends to use to finance the 2022 budget. Tolu, let's be sure. Let's get it right. There is nothing really wrong in borrowing, particularly when it is used to finance developmental expenditure. If you look at our situation in Nigeria today, the stock of infrastructure to GDP is one of the least in sub-Saharan Africa. According to the Integrated Infrastructure Master Plan, it's about 35%. So you have 35% to 85% that you have in, say, a country like South Africa. So it's one of the least in sub-Saharan Africa. And that the only way we can bridge this huge infrastructure gap is to commit as much as $100 billion on an annual basis for the next 30 years. $100 billion, works out at around 42, 43, trillion naira. And that's the size of the federal government budget and all the states, of the federation. If you add them together, you won't even get, that kind of money to plow into infrastructure. So for me, borrowing is one of the options that lend itself to financing infrastructure at this moment, given the fact that the country's revenue to GDP is as low as some say 6%, some say 8%. And for you to ramp up revenue to GDP to 15%, which is what we are targeting by 2025, is not going to be something you do overnight. So given the sticky nature of revenue growth and given the fact that we can't say we want to print money, for example, keep resorting to CBN's ways and means because of the impact it has on inflation. For me, borrowing to finance infrastructure, is in order. But I also have to say this, that it's important that that borrowing that we're talking about is strictly for developmental spending, because that is the only time that it would make sense. Because if you borrow and you don't apply to capital projects, of course the aim at the end of the day becomes defeated. So it becomes detrimental to growth when borrowing is not applied to proper use, as it were. So I think it's part of the government plan, but as I said earlier on, it has to be done right.
A good way to start indeed, Prof. Well, looking at debt to GDP ratio and what IMF and the World Bank has been saying, do we have to worry about a possible debt crisis?
Yes, I think the concerns are genuine. If you look at it from many fronts, the first front is the rate of the uptake in borrowing. If you look at the rate at which we have borrowed, even in the last few years, between 2014, December 2014, and now, for example, if you look at the case of total debt, the rate of increase has been in excess of 280%. And if you also take external debt components as another example, that is also even in excess of 800%. So the rate of borrowing has not generated, in my view, commensurate increase in our ability to pay. Okay, so that is where the concern is. A situation in which your debt stock is growing at an arithmetic progression and your revenue is growing, the other way around, the revenue is growing at an arithmetic progression and your debt stock is growing at a geometric progression. Okay, akin to saying you have revenue growing by, at 1, 3, 5, okay, 7 as we say in arithmetic sequence, and then the debt stock is growing 1, 3, 9, 27. That of course calls for caution or calls for worry. So the point must be made that the room for more debt, more borrowing, is not really defined by the debt to GDP ratio. It's not defined by the size of the GDP. And for me, that is the premise which I consider faulty that the debt management DMO has been using. So it is not in terms of debt to GDP really. But what is more important is that it should be seen from the point of view of capacity. Capacity to even absorb such loans, capacity to repay. And given the fact that our debt service to revenue ratio is so high, okay, that is when you begin to also see that there is reason to be cautious about how we borrow. Debt to GDP ratio, yes, is within indicative thresholds. Whether you're looking at our self-imposed limit of 40%, of course it used to be 25, we moved it to 40, or you're even looking at the international threshold of 56%. Okay, that is fine. But what is more important, in my view, which to me again is a better measure of the debt burden, is the debt service to revenue ratio, which sometimes is in excess of 70, 80%. So it is really worrisome that we are spending as much as 80 cents for every $1 that we earn just to service debt. So that is a major concern. The other concern too stems from even the composition or structure of this debt we are talking about. There are two aspects to it. The first aspect is the external component. Now, if you look at the external component, the concern is that in recent times, we have moved gradually from concessional sources to non-concessional sources. We are taking more of commercial debts now than the ones that are concessional that come from multilateral sources or even bilateral. If you have your loans coming from the World Bank, for example, we know they are concessional now for a very long time, and the interest rates, are very small. But in recent times, we have concentrated more on, we seem to have concentrated more on the commercial component. That's talking about Eurobonds, okay? And if you look at the Eurobonds that we have taken now, as the last time I checked, we have 13 outstanding Eurobonds. Just last month, we were able to redeem the $300 million diaspora bond. And of course, in January last year, we also redeemed 500 million. So we have about 13 of them now outstanding. If you look at those 13 outstanding bonds, compare the yield at issue with the current yield, and you find that the current yield is way ahead of the yield at issue for all of them. So you have Eurobonds now with yields of as high as 13.5%. Okay, in the international capital market, and these yields are bound to grow with the U.S. now, embarking on interest rate normalization, increasing rates. We are also likely to see bond yields also rising. So the cost of servicing commercial debts will continue to rise as long as we have these uncertainties, especially in the global economy. So that is why I think we should apply caution with respect to taking Eurobonds. And only in March, I think, we also took Eurobonds of issued Eurobonds of over $1 billion. So the idea of taking more commercial debts, because we feel they are easier to procure, because if you are taking World Bank loan, the process takes time. So because these ones are easier, and these ones also give you discretion to use the money as you like, we now go for them. I think that is not the way to go. It's not going to help our economy. If the loan is coming from multilateral sources, then ensure that you apply them to projects. Even the ones from bilateral, if you're taking from China Exim Bank, or you're taking from India Exim Bank, or you're taking from Japanese International Cooperation Agency or French Development Agency, they tend to also get interested in what you do with the money. But when you pick this money from international investors out there, they don't care what you do with the money. So if you decide to use the money to pay subsidies, fuel subsidies, for example, that is not their business, as long as they get their interest as and when due. So there is a problem, really, relying so much on commercial debts. Commercial debts constitutes not up to 40% of external debt stock, but in terms of debt service, check it, Tolu, is over 50%. Okay. Now, the other leg of it also has to do with the domestic debt itself. If you look at our domestic debt, over 70% is FGN bonds. The real infrastructure debt there is just less than 3%. And what do I mean by the real infrastructure component of that debt? I'm talking about Sukuk, and I'm talking about green bonds. If you take Sukuk and green bonds, it's less than 3%. But FGM bond is over 70%. And what is this FGM bond? The one we want to do in quarter 3 is FGM bond. If the government gets the money, there is no, if you like, requirement that you must use these funds for a particular purpose. And that is why I think we are getting it wrong. Okay, we should do more of infrastructure bonds if we must borrow, and those bonds, because we know that infrastructure bonds are ring-fenced. You ring-fence the proceeds; they must be applied to specific projects, just as we have the case of Sukuk. So for me, that's another worry, that even the domestic components, we are having more of FGM bonds, we're having more of general obligation bonds. We are not having bonds that are tied to infrastructure. The other concern too has to do with the application of these loans. Okay. Now, there is this feeling that part of these loans may even be going into funding consumption. Okay. How do I mean? What is the evidence? Now, if you look at the fact, if you check the fact that the budget deficit is 6.39 trillion. If you have a deficit of 6.3 trillion and you want to borrow to finance it, okay, it then means that that should also be the size of your capital expenditure. Because the Fiscal Responsibility Act is very clear that we should only borrow to fund the capital expenditure. So if our capital expenditure is, like in the 2022 budget, is I think 5.39 trillion. If you have 5 point something trillion as your capital and you have 6 points as your deficit, the money you're borrowing, it means that part of that money you're borrowing will go into consumption. It's as simple as that. And that is what we should avoid, borrowing to fund consumption. So application of whatever money we are taking is also very critical. And another concern too I have, especially on the part of subnationals, state governments, is the funding mismatch that we find associated with some of their borrowing. You find some state governments taking loans from banks to finance capital projects. You don't do that because that's clearly funding a mismatch. Or even take loans from bank to fund recurrent. Again, that is not something that should also be encouraged because that's worsening, the debt burden. So amidst these concerns that I have raised, there is need for us to apply caution, and the National Assembly has a lot of role to play. And of course, the part of the blame too rests with the National Assembly because they are the ones approving these loans. You can't approve a loan that you're not sure that will put to fruitful use. So it is the duty of the National Assembly to ensure that before any such loan is approved, it is very clear what the cost is, what the loan is meant for, and again, that the process from the whatever projects that will be financed, can be used to, settle the loan. So what I've said in a nutshell is that yes, borrowing is not bad, especially for a developing economy like Nigeria, but it's very, very important that whatever money we take is put to good use. And Tolu, if you ask me, I have a number of recommendations, that one
let's
can
make
make
some recommendations so we know how we can. Yes, I'd like us to have some recommendations with focus on how we can even think of looking inwards, at least to boost internally our internal revenue options. Do you think government is making concrete moves to do this, to also address all of these challenges? Let's wrap up on that note, Prof.
Yeah, well, I think so. I want to give the administration some credit in that direction. Under the government strategic revenue growth initiative, we have seen some traction in the terms of revenue. If you look at the actual revenue that came in 2021, you compare that to 2022. Of course, we have noticed an increase, particularly with respect to government independent revenue. In terms of taxes, whether it's companies' income tax, whether it's VAT, we've also seen some improvements arising more from the deployment of technology and, of course, government's effort at expanding the tax base. But again, as I said earlier on, these are reforms, if you like, that will take time to yield significant results. It's not easy really to say you want to ramp up revenue to GDP from 8% to 15%. It's going to take quite a while, which is why I said, yes, the borrowing option is there, provided that we are also doing it the right way. So quickly, I think we should begin to focus more on infrastructure bonds, ensuring that if we're issuing bonds, we are tying them to projects. Okay, nothing says we can't ramp up, we can't scale up the issuance of sukuk. We should be able to hear that government is issuing railway bonds, because that means if the proceeds come, they will be solely used for rail infrastructure. So I strongly recommend infrastructure bonds. That's one. And number two, government should also be looking at what is known as securitization. Securitization is also one way by which the government can finance infrastructure, as done in other climes. There is also this infrastructure investment companies. The central bank has been talking about Infraco. I'm sure you're aware. The Infraco company. That is something we should also speed up. Of course, that is something that involves the private sector. As a matter of fact, the government can borrow less, directly, if the private sector is actually involved to drive this infrastructure development. Just the other day, I read that in India, for example, India has been able to construct many kilometers of roads, using their infrastructure investment trust. There is an infrastructure investment trust in India, from which the government has been, executing infrastructure projects. And this, of course, these are private sector efforts. And it was from that trust that the government was able to do, from what I read, 75-kilometer roads in 5 days. Okay, so elsewhere in Malaysia and in Indonesia, in Singapore, we also have infrastructure debt funds, okay, and some other innovative ways of financing infrastructure. Okay, you have pension funds, you have institutional investors coming together to pool funds together, to finance infrastructure, and of course, over time, get returns. If it can be by way of equity, it can also be by way of debt, as in the case of infrastructure, debt fund. So let the private sector be involved. In Nigeria today, we have pension fund assets that is in excess of 12, 13 trillion naira, and we still have potentials to mobilize a lot of funds. It's just about prioritizing it, giving it attention. The opportunities are there. So I'm saying that there are alternatives to even this, borrowing we are doing. If we borrow to complement. We borrow, for example, for the government to fulfill its own counterpart fund when it is dealing with the private sector. So we should uptake our use of PPP arrangements in infrastructure financing. Of course, recently too, the government started this tax credits by which companies are encouraged to do infrastructure and then get tax waiver. Well, that's just one of them. But we want to see, some other innovative schemes, ways of financing infrastructure that is outside of, direct, borrowing. But again, even if we have to borrow, the domestic market, we have the captive market is there. It's important that the borrowing is tied to self-liquidating projects. It's very important. Again, I must mention, you don't borrow, for example, to put in social infrastructure. You don't borrow to put in, even when we say capital project, it's not all capital projects that is developmental. When capital projects, if capital projects include, for example, the purchase of cars, you don't borrow to buy cars. That is not developmental. So you only borrow for projects that have self-liquidating, ability. Social projects, education and health, for example, you try to fund them using your IGR, using the taxes you're getting. If you borrow to put in education, for example, you may have difficulty, refunding.
All right,
Except,
Prof.
of course, you can get such funds from the World Bank, okay, or from multilateral sources. So that's my
point noted, Prof. I must say that, and we hope that government and all that are listening to us take a cue from what you have stated and part of the solutions you have highlighted here. A comprehensive and of course educating conversation as usual with you, Prof. I've been speaking to Prof. Uche Uwaleke there, who is the president of the Association of Capital Market Academics of Nigeria, a professor of finance and capital markets. Thank you so much. Do enjoy your weekend.
Thank you so much, Tolu. It's my pleasure.
All right then.